Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Friday, October the 11th. The year's 2019. Let's talk trading weekly wrap up. And as you know, we always start off the weekly wrap up going over the money and risk management because I know on each and every trade this week you used money management and risk management. So on your losers, you didn't have any single loser bigger than the amount you were willing to lose on a trade. In fact, I stumbled across um, a quote, and it was pretty interesting, where they were saying that the consequences are more important than the probability. And what that means is that you, in many things, you don't know the outcome. Trading, for one, on any particular trade, you don't know if it's going to be a winner or loser. You just don't. You might think, based on statistics, that chances are you're going to have a winner, and that's why we develop systems and run statistics. But as some of us know better than others, sometimes trades just don't go the way we want them to go or the way we thought they would go. And that's why we use our risk management. And see, the consequence of the trade not going the way, we want to be able to control that, to control how much damage to our trading portfolio any particular trade can have. Just how much damage can it actually have on our portfolio? That's why we use the stop loss. That's why we determine our risk prior to entering the trade. And that's part of our management. That's part of the skill that we employ when we trade. But if you think about it, this is true in life. You have to think of the consequences. You might think it's okay to say run a red light because there's nobody there, but what if just maybe, you miss something, and next thing you know, you're in a life-ending or life-altering accident. So, you might think it's okay to exceed the speed limit, as you go around a blind corner, but you don't know what's around that blind corner. So, chances are there's might not be anything around there. And usually there isn't. But, the consequence of there being of something around there and you were exceeding the speed, so by the time you saw it, it was too late to brake or avoid it, it has heavy consequences. So it's something you need to keep in mind in trading and in life, is that think of the consequences. The consequences of not applying your stop loss, could be your accounts wiped out. Let's get on with it. Now, boys and girls, fellow traders, these videos are for educational purposes only, and that your results may differ from mine. And you also know that trading is very, very, very risky. So if you need financial advice, if you're seeking financial advice, make sure you find an accredited financial professional. That way, when they lose your money, you know it was lost by an accredited financial professional, rather than some guy you listen to on YouTube or read on a trading blog or forum somewhere. Okay, for the week. Look at this. All the gaps have filled. Now, boys and girls, I think up until yesterday's video, we still had about 4 or 5 gaps that hadn't filled. Ye of little faith. There was opportunities there. Don't say I didn't give you the heads up. And you can see here on dollar yen, it poked its head above the weekly high right there. We hit a weekly high of 108.616. That was a nice move out of those zones. And as you can see here, we're 123 pips below the open. You can see here, there's this formation right here. You can see the line. We've exceeded these 3 highs right here. We're getting into this area. So it could reverse or it could pop its head above the yearly open. Will we see 110 this year? It's possible. Now, here we go. Yesterday, I think we had already poked our head into the opening day of the month's range. You see here we exceeded it. Now we've pulled back into it. So look for a breakout of that first day of the month's range right here. And here we go, the weekly range chart. Here's Monday. This is the weekly open. And as you can see, you had opportunities to trade that weekly open here yesterday. It gave you one. Oh, I'm sorry. That's the euro. But so on the euro, you had that opportunity. On the dollar yen, no. Oh, good thing I double checked that. But you can see here, we just moved steadily away from the weekly open. In fact, high to open was 196 pips on the weekly. Open to low was only 0.2 pips. So as you can see, price just moved up this week. Inside bar here, we broke through that monthly inside bar that happened 1 month ago. In fact, let's just take a quick look here. So there's that monthly inside bar. We poked above it right there. The weekly inside bar you see here, we started off the week inside that weekly inside bar. That was 7 weeks ago, and we just rocketed right up. And the daily inside bar yesterday, we had entered and exited. So you can see here these simple inside bar horizontal line trades can be profitable. Why? Because price moves, it ranges, it goes up, it goes down. Here, breakout of previous day's high. Right here, 41 plus 19, that was a 60 if you nailed it. And once again, look at these ranges. Holy cow, the pound Australia, 400 pips. Pound Canadian, pound New Zealand. Pound New Zealand, 400. Pound Canadian, over 3. Pound dollar, knocking on the door at 300 pips. So there, once again, price ranges. It has to move. We put in the monthly H1 highest open 1 hour ago. Right there, you see price moved off it. And the lowest open right here, just movement to the upside. And the thing about these highest open, lowest opens, you can look at it on a weekly or on a daily. In fact, if I go back here, one screen, you see this lowest open here? We can even scrunch the chart in some. So we had a lowest open here inside a couple of wicks, but you see here these lowest opens. And notice one thing, this is on the daily. You get the price comes way down here, and it just seems like these reversals off a low on dollar yen just seem that first turn seems to be a big move. So what are we looking for? You see here we have a red candle, green at the bottom. You look to take that break at the high right there. And here you had another low open relative to this, the first or these few days here. But if you look here, there's the lowest, there's the next lowest there. Then if you just look back just, a few days or a few weeks, you can see here price making these turns. So, red followed by green that price breaks the high, look for it to continue. But once again, your results may be different from mine. And just switching to an hour chart, once again, you can see those results. And one thing about these charts, when you're looking at these charts, sometimes scrunch them up just so you don't get fixated. It's like playing chess. Don't just look at, those center 4 squares or those center 16 squares. No, look at all 64 squares on that chessboard. Same thing with price here. Because see, here we went way down, and if you weren't looking, you wouldn't have known that, hey, it actually made a new yearly low and then reversed off of it. I mean, if you're still in that trade from the yearly low, you've got some pips in your portfolio. Buy zone. Okay, what happened here? Pivot point. As you can see here, 1, 2, 3, 4. Just couldn't leave that zone. So worst case or best case, you scratched it or you stopped out above the open or in the buy zone when it was signaling a reversal. And you can see a price just wasn't breaking. So there was a buy zone trigger here. Because if you remember, weekly opens down here. So you've got the daily open above weekly, you want to go long. If you get in between the daily open and the weekly open, that's kind of what I like to think like the no trade zone, because you don't really know which way price wants to go. It has to expand on the weekly and it has to expand on the daily. You just don't know which way price is going. Here, red rats starting to feast. Okay. You can see here rat reversals or any triggers, wick zone trades here at the 15-minute level. Pivot point, we missed it. See, we missed that pivot. So we have a missed pivot in October at the moment. But as you can see here, this goes back for years, and you can see there wasn't any missed pivots. The oldest missed pivot as far as the 5,000 days or whatever is in 2018, December 18th. So it's just one of those things where you can trade and almost take it to the bank. And just remember, boys and girls, that it might take a couple of days to take out that pivot. So like right here and right here, it took a couple of days for those pivots, or a handful of days for those pivots to be taken out. So sometimes you have to have faith. And once again, if you're going to, hold this trade for a long time, then you trade very, very lightly, because that way you won't get the drawdown, or you'll get the drawdown won't affect your account. I mean, you might be trading like one micro lot or something, or just a couple of micro lots, and say, you know what, the swap is going to put some pennies in my account, and I'll just hold that trade till it comes and takes out the pivot. 3 ball at the top, price doesn't like staying between two lines, red at the line, and you go short. We see this all the time. Wick zone, in and out, in and out. And somebody asked me, see, this is an old 2014. And back then I said high, top, bottom, low, because we got the high, the top, the bottom, and the low. But then I just changed the wick zones because it's easier to say and people understand that. But you don't need this indicator per se. Might be nice to have, but you can use the TRO HL5. It shows the wick zones too. See, monthly high 1 month ago, weekly high 1 week ago. We came down through it. So actually we went through those wicks and then we came back down into it. Nothing much happening at the tick level. Nothing much happening on the Einstein line. You can see we actually entered the weekly ATR zone right here. So, fellow traders, that kind of wraps up the week. Almost 200 pip range this week, the average being 141. So, fellow traders, I hope you have a safe, fun weekend. I guess there's a holiday on Monday. So, when you come back, just remember, it's not when you It's not what you trade, it's how you trade it. So drain the banks and enjoy the holiday.